Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button for the algorithm and also subscribe. Thank you. Real quick before we jump in, make sure you guys check out my Patreon page. It's a page where you could go kind of see what my portfolio is. I have a special Patreon portfolio where I buy stocks, dividend stocks, and options, and also have only for Patreon stock market educational videos, so you can only see them there. So make sure you become a Patreon at patreon.com/daytradingfearless. So as always, let's jump right into it. In today's video, why dividend stocks are a great long-term buy. Okay. So first off, what is a dividend? Okay, a dividend is what a publicly traded company actually gives to its shareholders. Think of it as when they make profits, they take care of their shareholders, and it comes in the form of a dividend. Okay, so it's kind of like you will also get stock appreciation and also part of the company's earnings or profits because you are a shareholder. Not all companies offer a dividend. There's a lot of companies that make a whole bunch of money and don't take care of their shareholders. They keep all the money for themselves and the executives, right? But then there are other companies that it's a way for them to entice shareholders to actually come buy their stock and get like an added bonus kicker, so you get appreciation with the stock usually and also the dividend. Think of it as passive income, right? Financial education is knowing that you should have multiple streams of passive income coming in, cash flow, right? So collecting a dividend would be one way. So when are dividends paid? Usually dividends are paid either monthly, quarterly, semi-annually, or every year. It all depends on how each stock does it. It's at their own discretion. And there are times where companies, if they're doing really good, they pay a dividend. They'll actually raise the dividend. If times are a little tougher, we go through a recession, something like that, then companies will lower their dividend and you receive less dividend. You have usually what's called an ex-dividend date, okay, where you have to own the shares before the ex-dividend date to actually be able to qualify and get that dividend in the next couple weeks after the ex-dividend date. Now, just so you guys understand, if a company will say AT&T pays a 50-cent dividend, okay, every quarter, so every 3 months, when they pay out that dividend, usually the stock price will gap lower the following morning, okay, because if they close at 28, they might kind of open at 27.50, but it's built in. That's how they kind of pay everything. The stock price moves lower, but again, what you hope for is the stock goes all the way back up, appreciates, and you make your money, you make additional money there too. Now, understand that when you purchase a stock, we'll take for example AT&T. Okay, let's say this, so you buy this stock for currently it's around $27 or something like that. It pays a 7.8% dividend quarterly. So every 3 quarters, for every share or 3 months, for every share you own, you're going to collect 52 cents, I believe it is, with AT&T. Well, what might happen is AT&T is trading at 27, it might actually drop to $26 in the next 3 months, right? It might start to trend lower like it's been for the last 6 months or so. It's been trending lower. But it doesn't mean that losing money on the dividend, you're still collecting that 52 cents every single 3 months. So the stock might be like 25, and then 3 months later might go to 26, and then 4 months later, we'll say in a year's time, you might be at $22, right? Well, yeah, you've lost money on the principal, but you're still collecting that dividend, okay, of 52 cents every single quarter. Now, with that being said, usually with dividend stocks, you want to hold them for a really long time, because what will happen is when you actually kind of ride the waves, you might buy a AT&T at 27, you might look to add at 25, you might add some more at 23, you now have a cost basis of $25 on 300 shares, but think about it, you're collecting that 50 cents, and then maybe next year, by the end of next year, AT&T's all the way back up at $30. Well, guess what? While you waited, you've been collecting that 52 cents every single 3 months, right? And now, a year later or 2 years later, you might be at $30 a share. Well, you just made $500 on each 100 shares that you own, in addition to collecting the dividend during that whole time. So just something to think about. Don't freak out if you buy these and the stock goes lower. Have a plan, okay? My plan that I like to do is a dollar cost average. If it's a good company, I'll keep buying lower, and then on the moves back up is where you regain all your capital, but you're still collecting that dividend. Ways to enter a dividend stock, right? We just spoke about it, how it could just keep going lower and you just dollar cost average. Another way you could do something with a dividend stock is you can actually look to sell naked puts, right? So let's say AT&T's at $27. You can maybe go, hey, let me go out a month or 2 months and sell the 25 puts naked, right? Where you would have to buy them. And maybe you could collect 50 cents for that put while you wait a month or 2 months. But guess what? If the price never goes below 25, you keep that entire 50 cents, okay? And yet the stock goes higher and then the option expires worthless. Well, think about that. You collected essentially the same as if you own the stock, but you don't have any capital depreciation, right? It's not like the 100 shares you own at 27 is falling, because right now you don't own any by selling a put. And what you're looking for is you're looking kind of hoping that you never drop below 25 and you keep doing this month after month after month, where you're actually able to collect that 50 cents every month or 2 months, or 3 months, we'll say. But then if you ever do get put the stock, you're getting put usually 15% lower, 10, 15, 20%, whatever the number is, below where it currently is when you put the trade on, which you're totally happy with. So, and it also costs less money for doing all that. So, I kind of hope that helps. I'll do a video in the future of how all that works, and I'll kind of walk you guys step through step. But that's what I'm doing in my Patreon portfolio, where you guys can kind of follow along, and I'll let you guys know every time I make a new move if I sell a put, because yeah, I want to own it, but I want to own it at a lot lower price. But if it never gets there, I keep that put the cash that I sold it for. And then finally, number 5, why should you only buy good companies? Because you want to only own stocks that are actually good companies that make good money, right? Your Kellogg's, Johnson & Johnson, your AT&T's, Verizon's, companies that aren't going to go out of business. Now, you might have a lower dividend, but kind of like 2, 3, 4%, But those are safe companies. Yeah, if they go down, you know they're going to probably go back up eventually. It's because at the long term, over years, they have a upward projection. Now, something like the oil companies, do I really like them? Because who knows, I mean, who knows if we're even going to have oil in 10 years, right? So what's going to happen to the company over the next 10 years? Probably go lower. So they might pay a high dividend. They might pay a $10 dividend or sorry, a 10% dividend, something like that. But as the price goes lower, that dividend gets higher. So even though you're collecting a good dividend, you're losing on the stock price and maybe it doesn't go back up. So make sure you're doing this on good, safe, quality companies. Coca-Cola is a great one. Pepsi, Johnson & Johnson, right? To name a few. And then there are some funds that I personally like GAB. Yeah, if you do it right, you kind of go in, buy as it goes lower, you buy more, and then on the bounce, maybe sell, right? So you get the appreciation, and while you waited, you also collected the dividend. So I hope that helps. Top 5 reasons why dividend stocks are a great long-term buy. And as always, thank you for watching. Check out my Patreon page, link down below in the description. And until next time, we'll talk to you soon. Thank you.